Good morning, video morning brief of the U.S. stock market. I'm Rich Potts for Critical Point, Monday, Jan 27, 8:03 a.m. Eastern Time. We're winding down the month here. Okay, last night the stock market fell 140 points in the S&P 500. I didn't look at the Dow Jones. It's probably down 800 or more, some crazy thing. The result of this, or the reasoning behind this, is actually more of the AI business than Trump, but Trump stuff is big. Over the weekend, Trump slapped tariffs on Colombia. Colombia slapped even greater tariffs on us. Colombia refused immigrants that we sent to Colombia. There's some rattlings of other countries, and Canada is talking about cutting off energy supplies to the U.S. and soon, okay? And all this became upsetting to the market. That things are unraveling quickly on the Trump side because they've already had issues of trying to get people to deport, and it's now we're starting to get a better handle how much this might cost us. Someone said they need 100,000 beds just to work towards deportation. So all of this is moving very, very rapidly. And instead of people being optimistic, saying, oh, it'll all work out somehow, they're saying, maybe it won't. And they're really nervous over this whole tariff stuff wrecking the economy. Now, we also got AI news. And AI news is a Chinaman, or an organization in China, I should say. Someone created DeepSeek programming, AI, that apparently is far more advanced, more efficient, simpler, apparently took less work to create, apparently much cheaper to create and use, and as far as usage in the sense of like power usage and the types of computer chips that are required, they can get by with older equipment, which suddenly sends a message that the big name AI companies in this country may already be outdated, which suddenly warns people that the Mag 7 and even NVIDIA might be a bubble bursting or will burst sooner, and that everybody's paid way too much and got way too optimistic off of AI stocks and the AI economy. Meanwhile, there's more revelations coming that the AI economy can just destroy jobs. Way too much, the benefit really isn't there, okay? So this came to a head overnight, and basically this line right here at around 59.60 is giving me a guidance of how big the overnight drop is if at 9:30 a.m. Eastern Time the cash market matches the futures or where they are now. And what this will do is create a gigantic downside gap, telling us, yes, it will go up someday, but when, okay? And that it is overdone, overreaction, but it's also warning us just how nervous they are. There can still be more downside before it goes up. And it could go up and actually go down more and then have to back up again. We may have to work through this. Blew right past this gap. That's now going to be an upside gap, but it's also going to create a chart pattern for chartists and technicians called a bearish island reversal, an ugly sign, okay? The market's likely going to be down to this gap, which I warned might be the maximum amount of downside for level 3 that we'll discuss in a moment. There's still another gigantic gap here, so I may have to fall now all the way back there to near the low of the year. And again, we can blame this on Trump, Maconomics, but now also something that kind of shocked everyone, surprised everyone, that it's AI. We can also blame it on that we're a little bit high priced in the stock market anyways, okay? All right, or at least we were. All right, so now what we want to do is flip to the 6-hour chart and put some model analysis to this. And what we have is, and this is your snapshot, and sorry for taking so long to get the snapshot, we're due for level 4 up move by tomorrow. The market does not have to bottom until tomorrow, so it may go down all day today or set or stall out and then up. All right, but it can bottom today, and it may have just bottomed other than we need the cash market to bottom, okay? And then it can be higher tomorrow and perhaps in the next day for level 4s, okay? Now, As we zoom out, what we've learned is this is the first day, and this level 4 coming as the first opportunity to place a level 3 monthly buy signal or bottom. Now, most people will be scared to buy a straight down move. They're scared of catching a falling knife that might cut their fingers off, okay, or just cut them. And then again, they might catch it, and they can be a genius because this thing can rebound now into next week to the following week, okay, for the level 3. The problem with that thinking is the level 4, okay, the level 4s could still have a bearish bias and extend this level 3 out a few days yet before it bottoms. It is oversold overnight. That makes sense for such a big down move. We have an overnight gap in the futures, which is unusual, and therefore unusual for a day, but it's even more unusual that it's a gap lower on the weekly. So in my opinion, this is just screaming to put this market all the way back up and fill that gap someday. But when? And how low do we go in the meantime? Okay, it may take quite a while to get it back up there. Okay, and it may go quite a bit lower. But to me, that is somewhat of a bullish sign with what looks like a bleak start for the week, and it's not going so well for the month because people want a strong January. It's called the January barometer. They want a strong January. If you don't get a strong January, you may not have a strong year. It can be a problem year. I don't have a lot of faith in that myself, but there are people that do, okay, have some faith in it. All right, let's move out to the daily, and that's actually the SSO fund. Twice the performance of the S&P 500, gigantic gap. Probably will come down and fill this gap, and that might be the better buy area. But my feeling is that the price is low enough to start nibbling and buying. We just don't know, does anyone really dare take a chance of a straight down move? You would be pure timing if you're quite aggressive buyer. You're dangling yourself over a frying pan, okay? Any rate, this is the daily chart as of Friday, and we have this gap here, and the market's going to fly right below it. We have this 40-day moving average, and the market's going to probably drop open below that as well, and also go past that little gap. But these could be things that could create a floor price and put it back up. Market may just continue to drop down to 5,900 on down to the 100-day moving average at about 58.54. And then if it takes out the low of the year, it may go down to 5,600, and we've known that for some time. What's the best stance is it's probably not going below the 59.60 mark here for this level 3, or not much below it, okay? So now let's switch to the daily chart and put some model analysis on this and use the futures with the overnight market for additional insight. And there's our overnight collapse, okay? Gap down, market's probably going higher. The model added 2 additional days for level 3 bottom to help compensate for this weakness that it may take quite a while for the market to settle down. So it's warning the market can bottom today, move higher into next week, into the following week. The model's also saying, however, it may bounce today into tomorrow, or go down all day today and bounce tomorrow, and maybe next day for level 4s, only to be down again and lower still for level 3 in the next few days. And there might even be a total of 3 additional level 3s that this market can go lower into next week. That's going to get really ugly. My guess, though, is the pace of decline will slow down. The worst of the ugliness, how fast the drop, is probably about over. Now, daily indicator overbought, warning we had a right to look for level 3 top, and there it is now, a sell signal starting to pull out of the overbought. It's wide enough spread that if it looks that way by the end of the day, it would be a warning we have potential downside lingering momentum the next 1 to 3 days, and the model is saying yes, and it may even take longer than that. It may have pulled down to mid-range. If it's going to pull down to oversold, that's going to get really ugly. The market's probably going back to 5,900 in the futures, and there's a premium in the futures, so that means the cash will be even lower. It'll be down in the 5,800 area, okay? Any rate, now, also consider this trend line that I did not extend out. Notice this morning it dipped below it, bounced back above it. We'll have to see how it settles, but I think somewheres in this time frame, somewhere's in this price trend line, a little below it, a little above it, it's going to bottom for level 3 and move up. So how I look at it, there's actually more time to go up than down, but there's still quite a bit of time to go down. There's far more upside potential, probably, because I think it should recover when we look at larger trends that we'll discuss in a moment. But there's still plenty of downside potential still, okay? And that's where we're at. So can it bottom today? This could be just flash and pan overreaction, and they're going to want to watch NVIDIA Mag 7, see how this AI handles this news out of China. And by the way, over the weekend, I was looking at a lot of things. It's just amazing to me how well China is educating their people, how well they're manufacturing. I've bought some things manufacturing-wise that needed really to be precision manufactured. They're every bit as good as U.S. manufacturers. Their design may even be getting better. Their customer support is better than the U.S. Their technical support may be better than the U.S. I haven't had enough experience with that yet, but it's been very easy to work with. I've had things where I say, this just broke on me, and they just said, how about we send you another one? And they sent it right away, no questions asked. In the U.S., you have to fight and argue to get your money back, get refunds, to get some replacement. We're really not, as I said before, we're mentally ill, physically ill people, and we really have a poor capitalistic system right now and a poor business system. And the world's just moving right on past us, okay? We need to get back to science and math. We need to get back to having a society and culture. And we're going to discuss more of this when there's things like Oswald Spengler, who wrote a book 100 years ago saying the decline of the West, and we're the West. And it's supposed to have been a few decades to now, we just go away, okay? All right, any rate, level 1 top, level 1 bottom. This is the weekly chart of the S&P 500. Big explosion, okay? Now it's going to come down, and there's this little line that we warned you last week. We were looking for level 3 top. And it was very difficult to be brave enough to call it last week, and we didn't. And the answer is that it could have gone higher early this week. It could have been down a little, then up a little this week, then down. Now we know it's just down. It's a done deal, folks. That is a level 3 top. We're now looking for a level 3 bottom this week or next, and then it should rebound into the next level 3 top. Now, when I look at all, these level 3s are going to be in a zigzag formation of higher from the lowest price of this year into a level 2 top due the week of February 3rd to the week of March 3rd. And I've been saying all along, I think it's going to be February. I think it's going to be sooner rather than later. And that's just because I don't think Trump's going to let up. There's going to be more crap coming. It's possible he'll chill out and the Republicans beat up on him enough and they chill out. But I think there's more crap coming, okay? So I now question how high, all right? But it should go higher. They should snap it back this week and then up and away, but they may snap it back all this week and the next week, then up and away. But it should go higher to a record high still, believe it or not. Now, if they crash this more towards the 5,800 level, even the 5,900 level, then the model's going to say it does not have to go to a record high, but it should rebound a fair amount. And turned out to be a weak, screwed up level 2 pattern that we can blame on AI and we can blame on Trump, okay? At any rate, once that level 2 top's in place, the market should pull back into a level 2 bottom, now slated for March 10th to April 7th. That's new information, I believe. And it can be a small setback, it can be a large setback, it can be all over the map because Trump's going to be all over the map, Maganomics, the world, global trade, tariffs. It could be wild and crazy. It could be quiet. This is our fair valuation, which I think I'm already high on that, but I think it could dip below it to be undervalued to help snap it back up. I'm hopeful it's actually going to be a floor price, that we're not going to see the market go much below the 6,000 level in the cash market, which we might be asking for too much this time around, okay, with what's going on overnight in this AI business and Trump. Now, once the level 2 bottom's in place, the market should move higher for level 2 into level 2 and level 1. And the level 2 is just creating a zig-zag zig of a level 1. So from the lowest price of this year, it should move higher into April, May, June, and then drop into a level 1 bottom April, May, June, July, and it's looking like it's more like May, June, maybe July, and the top's looking more like April, May, probably not June, okay? And it should go to a record high, because this high, even though we have not found the level 2, it's within the level 2 trend, and that's the highest so far, and it happens to be higher than level 1. That violates a rule that triggers a model rule saying the next level 1 should be higher still. Okay, so it should even be higher than last week's high. It ought to be a new record high. The problem is sometimes it doesn't work that way, and the market just comes near that high, but ideally it'll be a record high. With all the Trump, Maganomics, AI stuff now, it's quite possible we're not going to get a record high going into April, May, June. Things can have that much of a headwind and problematic. It's also possible April, May, June, July, we see a decline with this level 1 of -7 to -13%. We're coming up with some weird stuff saying we might see that coming very, very soon. I'm trying to come up with an alternate plan that this level 2 top is actually level 1. We're going to flip these around, and this was a gigantic historical, well, I shouldn't say historical, it's not a new record, but it could be that this is the true level 1 and still a minor long-term top. So we do have ideas of how it won't go to a record high by April, May, June, and we might even get a -7 to -13% decline very, very soon. Now, come April, May, June, or maybe just the next few weeks with this alternate scenario, I'm also going to call a minor long-term top should be the latest allowed, especially by April, May, June. And I hate to call it yet again because they said I would not. But that could add even more downside when we need to consider maybe as much as 20 or 30% down this year. But I will call that. I'm fine with being wrong and hurting my accuracy and my name, and I think I can deal with it money-wise to make it all worthwhile. I'd rather do that than later learn that I should have done it. However, on top of this LT3, I'm going to call LT2 and LT1 a once-a-decade sell signal, but I'm not going to actually call it. It's not going to be official. It's not going to be an alert, a signal. It's just going to be a warning that we might actually have the once-a-decade sell signal this year and or next, or I should say or next, and we can have a decline of much as -60% this year and or next. If we can get past 26, we can then return to what we had forecast for many years, that we wanted to be a once-a-decade sell signal in 2028 to 2031. Now it's going to be 2027 to 2020 or 2030, and again, attribute that more to Trump and Maganomics than anything else. I think we may get a bird flu pandemic and something else, however. So we got lots of roly-poly crazy things going on. We may be down 60% this year, and it may be starting now. It's more likely to start in just a few weeks, and it's even more likely to wait until April, May, June, and then start. And then again, we don't have to have anything like that for bearishness. It just doesn't have to work. That's why I'm not going to make an official alert or call. But we could get as much as 30% down, and I'll gamble on making that call. And that may show up in the next few weeks. More likely, it probably will not show up to April, May, June. And that could be 30% down, and it may only be -7, -13%. Okay? Strip out all that long-term stuff and all that -20, 30, 60% stuff, the market would likely just move to a record high in April, May, pull back about -7 to -13%, and then still go higher into next year. And when that's, for the moment, still the best forecast, but I'm really wondering with this AI stuff, are we over and done with, and are people going to really start adjusting what they're trying to forecast here for the stock market? And we've got all sorts of problems and headwinds coming. This is the Mag 7, and it looks like it should go higher into April, May, June. At least ought to go higher into February. But this morning, it's going to get beat up. Okay, this is NVIDIA, and that doesn't have to go higher, and it can get beat up. But I think there's a chance it can be higher down the road still. And then we noticed on the equal weighted index, they were buying across the board. We had a resurgence in breadth and percent stocks over 200-day average, but it might be all over. And it's certainly going to get beat up today, even if not. They're going to dump some stocks. So this is, and the NASDAQ had been dragging its feet anyways. It seemed to be more unsure. So this is the futures. And if by chance the futures take out the low of the year, we may see the futures down into the 5,500 to 5,300s. Okay. That's something to think about later this year. It could be quite a while before we get it, and it does not have to occur, but something to think about. This morning, this is the futures, what it looks like on a weekly, and even though we're off 100 and some points, and that sounds ugly, it doesn't look that ugly to me on the weekly chart. And it's back to the 5-week average, and it snapped below it, and I snapped it back to it. With any luck at all, if it closes this week above the 5-week average, I think we're okay, and it is going to move higher into a level 2 sell signal in February, and we will have to consider it might be something far more important, even long term. But ideally, it just pulls back some and goes higher still into April, May for the level 1. And then that's where, yes, we do have to gamble on the risk of maybe even a long-term top after all. Now, the weekly indicator is above mid-range still, and it's a wide enough spread that even with this big drop this morning, it's trying to reject it. It's trying to say that is a wide enough spread that the market ought to go higher in the next 1 to 3 weeks. I shouldn't say it ought to. It's just saying it can have lingering upside momentum. So this may be a very large knee-jerk reaction over. They made a big deal out of this, and we're going to shrug this off. And we are looking for a level 3 bottom. And for the moment, we're saying, yeah, it's probably going all the way back up. But we're also wondering what else can break, what else can go wrong. And with the Maganomics, Trump stuff, right-wing stuff, there's a lot that can break yet, a lot of problems that can go on here. And now with this AI, it's got people panicking here that they don't really know what to do. They're nervous. We had this beautiful concept of AI being big, big business, and now we have someone for China saying this can be a very low profit business because it can be a very low cheap business and everybody can get it very, very quickly, and they don't need those chips. Now, last night someone was saying, if you look at what NVIDIA is selling and if you look at what the Chinese people did, they didn't give you the full story, that it is a bit more expensive than what they said to create it and run it. And they will still need some of those good chips. And it did take more people to invent it. I mean, it looks like what China has done is here in this country, we got thousands of people working on AI, some of them being paid $1 million to $6 million just per year just to be programmers. And basically, China come out and built it for 25 cents. That's how gigantic the difference, okay? So it really scared the stock market last night. But keep in mind, we've got terrorists, we got Trump issues, we got deportation issues. This Trump thing is really rolling. We got problems that the market ought to have been down anyways for a level 3. But I must say, even with the Trump stuff, it should not have dropped this much in my opinion, okay? And so it's the AI that's adding to this, and they need some time to figure that out. Well, here's hopeful it's going to move up, and if it moves up above the overnight high of 61.05 and a quarter in the March S&P 500 futures, that will be filling the gap today, this week, and maybe a sale. But frankly, I would be encouraged as saying we probably got a level 3 up move, and if it's already moved up that much, it ought to just move on to a record high after all, and move higher into that level 2. So I think that would be a positive sign and give me a positive week. I think that's a positive sign. But in the meantime, it does look ugly and we want to be careful. Now, we said interest rates in dollar can be a negative thing because I think interest rates are going higher this year into next. Inflation can go higher this year into next. Unemployment can go higher over the next 4 years. Crime can increase the next 4 years. Customer service to companies is going to decline, and you're going to have to fight tooth and nail to get your money back from companies. It's just going to be a miserable time. And yet the interesting thing is we'll still work hard, be creative, productive, we'll still spend as consumers, businesses still will go on, we can still actually have a good economy and a good stock market unless the Trump stuff breaks stuff. But now with this AI, we also all have to worry. Well, the interest rates are down last night. I would have thought they would have been up off the Trump tariffs, but what it is they're concerned the economy is going to crumble, at least for the future, for calculations of where we're going in the future, just because of this AI, and then maybe Trump. So they decided to lower interest rates first to kind of help out, kind of say, well, maybe the Fed Reserve might even lower interest rates here Wednesday. And our slate this week is Wednesday is Fed Reserve. Okay. At the end of the week, we might have a jobs report. I forget now. We might have a PCE inflation. That could be the next week. I don't know. But in theory, the end of this week, I thought they were going to sell to prepare for Trump tariffs February 1st and later. Now they're already selling, and the tariffs are already there, so that's kind of messing that up, okay? We still have earnings, but the earnings may not matter right now, even if they're good. People are more nervous of that AI and Trump, all right? Anyways, interest rates are coming down, trying to help out, I think, to stabilize, and we knew they were supposed to come down for bottoms into level 1. This was a level 3 bottom. We may have to put it back to there and start looking for the bottom this week instead of next week. But I'm still concerned unless they beat these interest rates all the way down to more closer to 4.2%, at least 4.4, then that doesn't give enough room to rally in a level 2 and then this summer into a level 1. I'm nervous if it's going higher still. It probably is because of Trump tariffs, inflation, other worries, but I also think that's going to cause problems. And if it goes above 4.98%, I think that sets a target of at least 5.03%, but also uses that target I did in a special report of 6 to 6.5%, and that's ugly. And it may even be ugly above 5%. There's already some big Wall Street people saying that, okay? Even BlackRock's Fink or someone warned that could be a problem. Now, for inflation, I'll probably do another inflation special report here soon, but what I'm saying is if it goes above 3.5% now in the next few years, there is risk of 4, 5, maybe even as much as 10%. It could get really ugly in the next few years. So we're going to watch that as an if-then statement of above 3.5%, then problems. And then interest rates greater than 4.98%, then problems. So let's keep an eye on that stuff as well. All right, let's go back to my intraday list, but I'm going over to the weekly chart. Dollar index, and this is dollar index. It is lower this morning. It is worried about where are we going for the future here. Not as dramatic, I think, as maybe the interest rates, or maybe they're on the same page, but certainly not as dramatic as the stock market. Trade back above the overnight high in interest rates of 107.81. I think it's a positive. I think an up week anytime now in the next few weeks, a positive thing that we can put the dollar up in coming weeks. And what I'm concerned of is if the interest rates want to go above 4.98, the dollar is probably going to go to a new high for this decade going into summer. And some people like that and think it's going to be a good thing for the economy. My work is saying it's going to be a bad thing for the stock market. Okay. All right. And we've got lots of other stuff to be discussing later this week. Even Paul Krugman put out some good things, and he's going to be speaking at a university or something here where he says the MAGAs are coming up with some new economists that are showing things can be good the way they're doing it. And he's saying you kind of look at some of those things saying, yeah, that can work. And then he says you put it to the overall blend and study history back maybe to the 1700s when you also have to use England to help with that. But he's saying, no, it's still adding up. This MAGA stuff is not going to work. All right, that's where we're at today, and we'll finish this up with the 6-hour chart of the futures here. We've got this big drop here. And I think it could very well be a buy, but I'm not brave enough, and the model's not brave enough to call it a buy. I may nibble at it a little here in the futures market. Probably won't do anything else. and I'm already full position in a lot of my stuff anyways. I couldn't play this level 3 downswing fast enough to lighten up a little. I did not want to get out entirely. And I think this might yet still be actually a nice buy, but it may take a few days to really be that. The interesting is we have the futures and the S&P off 140, but we only have the Dow Jones off 407. And now I even have it off 280. And the NASDAQ futures off the worst, off 770. So the Dow Jones is kind of the blue chip, the safe haven a little bit, and that may even be a sign the equal weighted index and those other 493 stocks have a little less risk right now. That really the real risk is Mag 7, NVIDIA, anything with AI. But let's also keep in mind they were getting a bit nervous with this Trump stuff. But it looks like the AI is the bigger story. All right. Past results are not necessarily indicative of future results. Have a great day. I think this market will be higher in the next 1.5 to 2 weeks. I think it can be higher longer than that. But I also think we got some important risk points for the next few months throughout the year that can create some massive downsides, so we have to be careful of that too. But there is a possibility of being optimistic and bullish still here, make some money, and that 6,300 to 6,500 target is still on the table, but there are things that can blow it right out of the water too. So topsy-turvy, got to be a little careful here, but we're still rather optimistic and bullish, and I'm thinking this is probably a buy now in the next few days for the U.S. stock market. Okay? Have a great day. Thank you.